Okay, let's go over crude oil. We always go over J signal. Every day we go over J signal, J signal, J signal, J signal, right? We know how to do that. We know in J signal, we look for corrective waves and motive waves. Very simple to do. Corrective wave, motive wave, corrective wave, motive wave. Well, how about these black charts? How do we trade it? When you log into Omnivia, go to your bottom right under documents. And I want you to print out that one-page sheet that says how to trade the black charts. Go to Kinko's. If you want to print it out in color, you can do it on your own color printer at home or your printer at home. What's that one-page sheet say to do? We have a very complex system right here that we deal with, but very easy to execute. Anybody can execute this trade setup. What it is, I have two black charts over here. We're not going to talk about J signal right now. We're going to talk about the black charts. There's two J signals, a total separate setup. There's only one setup we do on J signal. It's called a number 3 trade. That was here. Called this low right here. That's a number 3 trade right there. Right? So that's J signal, but we're not going to talk about that setup. I'm going to tell you how you got the low right below that. So that's a number 3. There's only one setup. If you're a J signal trader, or at least you have the software on your own Ninja Trader, that's your number 3. There's only one setup to learn right here. Well, in the black charts, you can trade the black charts all by itself also. Just like J signal. J signal called that exact low on its big run up. And the black charts is very simple. If you look at that, if you go to documents, log into Omnivia and print that document PDF out, what's the first thing it says to do when you log in? Get some coffee, get some tea. You got to establish trend. You look at your 2 moving averages. The bias is up. My slower moving average was above my bigger moving average on the black chart. I cannot short, no, hell or high water, I'm not allowed to counter trend trade the market. You cannot short the market. You only take it long. How do I take it long? I got 2 market profile levels. The bottom left is more high volume, low volume node, volume based, and this is more price based, the big chart. Low value area, I don't trade the control point. Control point to me is for amateur traders. It's where the most volume's been traded. 50% of the time it works, 50% of the time it doesn't. I don't see any reason why any trader should trade the control point. Traders that trade the control point or be educated to trade the control point, they really don't have a clue about price action if they trade market profile as much as we do. You want to play out the value areas, not the control point. Control point are for amateur traders. They get stopped out a lot. You want to trade out the value areas. So the value areas will be dictated green dots on the bottom left chart. The middle chart, green dots here also. It's low value area. The red dots are high value area, and the hedge funds are also considered the high value area. In red, and low value area in green. It's very simple how you trade. If you look at that one-page sheet, the 5-minute trend is up, right? You take the first test, and I cannot say this enough, the first test of the area, it's got to come within 2 ticks of 54.76 or 54.45, whatever comes first. So what we did, we came down. If you look on my chart here, on the number 1 that we caught the low on, it came down within 2 ticks. There's my low value area on the number 1 trade out the black charts all the way at the exact low, just like we called the exact low yesterday and the high the day before. It came within 2 ticks. So now what you do is use my Renko bar to pull yourself in the trade. So I came within 2 ticks at 54.76 in low value. It says I'm allowed to buy the first test of low value area within 2 ticks. Well, you just can't when it comes within 2 ticks of 54.76, 2 to 3 ticks. You can't just buy at the market. You got to wait for the market to pull us in. So when we get within 2 to 3 ticks, which we did at 8:19, you look for a close above the doji or spinning top. I only got 2 candlestick patterns that form on my Renko bar chart. I got a doji and a spinning top. A doji looks like a plus sign, and a spinning top is in blue on your chart. So once you get that, I'll blow it up for you to show you what it looks like. There's your spinning top. Look at that. I mean doji, plus sign. How we pull ourselves in is we want a body of the candle to close above within 2 ticks of the LVA with 5-minute trend. That's how easy this is. I don't care 40 years experience. I don't care if you have 1 day experience in the market. Doesn't matter. It's being systematic and knowing the rules on how to pull the trigger, where to place your stop, how to exit. There is your entry right there. There's your body candle close above, your exact bar entry. I would not do more than a 13 to 15 tick stop. A lot of traders use 13 on a number one trade. You don't need any more than that. Okay? There's your exact bar entry when this bar closes above, not the wick, but the body of the candle. Once you get in, you can scale positions at my symmetry dots. I love my symmetry dots. My symmetry dots on your own Ninja chart are red for longs. Build 50% there. When we're in the trade, I said the next target would be 23. Then I said the next target is going to be HVA on the other side, and we got our final target up there. My HVA called the exact high, I think to the tick. My market profile again. Right? Market profile on these two charts are phenomenal. All right? So you can see the difference between J signal and the black charts. My black chart's called the exact low. Called the exact low. Where J signal, the number 3 pattern, is a continuation trade. So in J signal, you're going to look for one setup, a number 3 pattern. And the black chart, you look for a number 3 pattern and a number 1 pattern off the LV and HVA. And the beautiful thing about the J signal, if you look at it, is in my sweet spot. I keep telling you it's a 62% retracement where J signal likes to stop. That's how I got this little sucker programmed. Gee, imagine that. J signal stopped at 62% retracement again with 5-minute trend direction. There it goes. Like clockwork, just like yesterday. So there's an advantage to trading out the black charts if you want to. There's an advantage to just trading J signal all by itself, or you can trade both. But the black charts are totally separate of the J signal chart. J signals is a continuation. It's trying to catch a lower high or higher low. You see the number 3 pattern? It's a higher low. That's why we're so accurate on the J signal trades. Look at that higher low. And the black charts, the number 1 trades are what? The number 1 trades are trying to catch the exact low or exact high. All right? Now check this out. We're allowed to buy the breakout of HVA or LVA on the 3 Simrenko only. Let's look at this buy setup here. That's a valid buy setup. This is a valid buy setup. Why? Because we got through HVA. If you get through HVA the first time, you're allowed to buy the first retest. Same thing happened down here. We got below HVA. So you're allowed to short right here. You're allowed to take that short, just like you're allowed to take that long. The first short went right to the symmetry dots, almost to the exact tick. This long went right up to symmetry dots, and it almost got the exact tick high also. Why is that a valid trade? On the 3 Simrenko, you're only allowed to buy and sell when you first break outside of HVA or LVA on J signal. Here's your exact bar entry. Now look at your stop. Your stop has to be a 2/3 body candle close. Wicks don't count. Take a look at it. Look how they stopped all the novice traders out by wicking them. All the amateur traders got wicked out on this trade. Now we knew the symmetrical wedge, we're looking for a big breakout anyway, right? We already knew we're looking for a big breakout. So that really solidified our number 1 trade to the upside. So if you look this morning, there's no way you could have got stopped out using the system. No way possible using my methodology on crude oil. There's no way you could have got stopped out. If you took my number 1 trade, you never got stopped out. You caught the low. If you took my number 3 J signal, which is a valid trade at 62% retracement with the green arrow, never got stopped out. And if you broke outside of HVA and a retest of HVA with the first J signal, you never got stopped out on your first target also. So we had 2 number 3s today, and we had 3 number 3s that worked out. On J signal, there's only one pattern to learn on J signal. That's a number 3 pattern. We had 3 number 3s that worked out this morning. They've all worked. And then we had my number 1 that caught the exact low in the market. There you go. 1, 2, 3, 3 J signal trades in a row worked. And my number 1 caught the exact low. You get 2 ticks, 2 to 3 ticks beside LVA. You let the 3 Simrenko chart pull you in, right, Jim?